Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock market analysis for August the 26th. Overall, a very volatile week, to say the least, in all U.S. markets, with continued trading in a push-pull action between the bulls and the bears, with the bears winning out in a major way on Friday. All major indexes closed the week very much down, nearly 2% across the board, with the Dow dropping approximately 1% for this week, while the S&P pulled back 1.4% and the Nasdaq leading out on the downside with 1.8% pullback, with the bears stepping in aggressively with mostly domestic news. And we'll walk through just a little bit of that news in preparation for this upcoming week. The week actually ended on a down note. However, majority of the week we saw a nice little uptrend into major announcements on Friday from China, the U.S. Federal Reserve Chairman, and the White House. China announced anywhere between 5 and 10% on roughly about $75 billion of U.S. goods effective on September 1st, and the second impact will be seen on December the 15th. Including into these tariffs is a whopping 25% tariff on all U.S. major car imports into China. Additionally, the federal chairman, Powell, speaking in Jackson Hole, all but guaranteed an additional rate cut as the U.S. economy continues to slow from the uncertainty of the tariffs. The market began to recover slightly after Chairman Powell's speech, providing some type of semblance of certainty. As we always speak in our videos, the market does not like uncertainty. So after Powell's speech, it began to provide a little bit more guidance moving forward. However, midday, stocks plummeted as the U.S. president announced via Twitter that he orders that all U.S. manufacturers find alternatives to their operations in China, which is a major impact primarily to the tech sector, which saw the greatest impact on this news, with Apple leading the way lower as they have major exposure to China manufacturing, with Apple down nearly 5%, roughly about 11 points, just on Friday alone on this news. As with always, we'll jump right in and look at the S&P 500. We have continued to be, as we state, in this push-pull faction overall for the last few weeks, given that we've been in this nice trading range anywhere between 293 and 282. However, this past week we saw a large pull downward, given that we were not able to get out of value prior to the news coming out from China, which just accelerated that initial selling. Now, one good bright spot that we do see in the S&P 500, and we'll zoom in just here a little bit to help you see it a little bit better, we did not make a new lower low, which it will continue to provide some type of support moving forward, we hope. Now, hope is not a strategy, great campaign slogan, but it's not necessarily a good strategy, but it is giving us a little bit of a clue that there may be, on the front side of this week, initial selling to kind of test this moving average here, roughly about 282. Now, if this does provide some type of initial support moving forward, we do anticipate that we would continue back upward to the top of this overall trading range. However, there is a lot of nervousness across the board, rightfully so, because there still continues to be uncertainty around our China tariffs. But at the same time, we do notice two major trend lines that we do want to kind of highlight. This first one, which is clearly broken over the last 2 weeks or so, but at the same time, we do have one that is holding relatively steady in this kind of upward, higher low type fashion, which if we do break this trend line, we do anticipate we would continue much, much lower, which is good for the bears and bad for majority of the bulls. We do want to give full disclosure. We have been short within our portfolio over the last 3 weeks or so. We did close out a number of our positions toward this latter part of the week in anticipation of some macroeconomic news coming out of the White House as President Trump continues to participate in the G7 summit. Now, we do want to watch this level of 284 to see if we can break this trend line here. Now, if we do break the trend line, the next logical location where we do see on the profile, where we do see a lot of volume, is roughly about that 280 mark. And if we do breach that 280, we do feel that our longer term area of a buy zone, roughly about 272, 274, will be in action Now, we do not believe that we will reach that far, barring something dramatic in this upcoming week. However, we do want to be flexible and make adjustments as we do see the market unfolding in front of us. Now, for those that are active and looking at their portfolios, this is something that you should not necessarily be very much nervous about. However, it is a clear indication of uncertainty as we continue to fight back and forth between China. So that does create a little bit of angst amongst a lot of individuals as we do see pretty sizable drops rather quickly. And if we zoom in just on the daily, it kind of exposes it just that much more. And we will zoom in just a little bit to be able to see exactly what has taken place. And you can see the order of magnitude just on Friday alone on the S&P. Pretty dramatic drop overall. Now, we did notice, if we dove in just that much closer into our intraday action, it was a very orderly auction, meaning that there was not a lot of panic selling. It was very strategic and very slow and rhythmic. Now, it was aggressive in the quantity of shares that were traded. However, it was not something that we did see in major issues, roughly, say, around election in 2016 or 9/11, where we did see a lot of panic selling. So that does give us a little bit of hope as we shift over to the Nasdaq that there may be some bottom coming in over the next week or so, given some type of macroeconomic news and potentially a pullback in the conversation and rhetoric coming from both China and from the U.S. side in regards to trading of U.S. goods and pulling back on these tariffs. Now, if we look at the Nasdaq, as we stated earlier, Nasdaq did see a higher pullback given the amount of exposure from the tech-heavy aspect of this index and its overall engagement in China activities from a consumer electronics perspective. And we'll kind of map out what we're seeing from a trend line perspective, and you can see that this maps very, very precisely. And we do feel that there will be some type of breach of this trend line. Now, what we do want to anticipate is if there is a breach of this trend line, where do we feel that it will go? We've mapped out roughly about 175 area that we do want to watch moving forward. And we do feel that there may be a touch of that over the next week or 2 weeks, which maps right into a low volume node where we do see the auction kind of pausing and looking for some opportunity to retrace back upward, back into where there is a lot of volume. Now, if you do see this level breach, we do anticipate moving back down and potentially touching our value area low. Now, we don't feel that that will happen barring something very, very dramatic over the next week or two. At the same time, if that does trend line, if that does hold, we do anticipate some type of balance moving back upwards into the point of control and kind of moving from a sideways perspective. Now, both in the S&P and the Nasdaq, we do feel that we will continue with a little bit of bearish news, and we want to try to be nimble to let the market unfold in front of us and to make decisions based upon what we see versus what we really hope to anticipate. Again, hope is a wonderful campaign strategy, but it's not a great investing strategy. So we do want to watch out moving forward, but we do feel that this trend line will be key, and roughly about the 182, 181 level will be key for us to watch. And we'll zoom in just a little bit, similar to what we did on the S&P, so you can see the order of magnitude of these Friday action as we pumped right into exactly where we denoted and foresaw from last week and reverted right back down and just closing just below the trend line. Now, this could be seen as a both bearish and a bullish signal that we did kind of retrace toward the end of the closing day. However, we do anticipate some type of follow through from a selling perspective as we look into the front side of next week, and we'll be looking at some macroeconomic news as we jump over to the Russell, which is heavily weighted to U.S. stocks, which will see some larger impact from a tariff perspective as we we've continued to converse about. Now, one thing that we do want to highlight is that despite the major selling of the Russell over the last week in conjunction with all the major indices, we did see a little bit of a bright spot where we did see that the close of this past week did not breach our value area low. So we did, if we zoom in just a little bit, we'll see that we did come just below our value, but we did end up closing back into value, which is a slightly bullish symbol for us that this is a key level for us from a support perspective. And we do anticipate another test of this level that we do call it out at roughly about 145 level as we go into the front side of next week. Now, if this does hold, we do anticipate some retracement back up into range and potentially coming back up into this next low volume node as a potential resistance for us to continue in this trading range. Now, again, we have repeatedly stated over the last few weeks that we are in a nice, as we call a box, where we're just pushing and pulling bears and bulls, really trying to find out what is a fair price for the overall auction. Now, we do want to highlight to all of our viewers as well as all of our clients that we do need to pay attention to this macroeconomic news, which is a huge driver for the market in a reaction. Now, if we zoom in just a little bit on the daily, we don't recommend making major adjustments to your overall portfolio on a daily basis, but we do want to just kind of highlight the order of magnitude to which we did see the sell-off coming into Friday. Now, majority of the week, we were in a tighter range, which you kind of see here Monday through Thursday, as kind of just a push-pull back and forth, and we did see that that did not hold from a 20-period moving average, which is a typical buying and selling point, especially in this market, as we can see that we have had a pretty natural downtrend over the last multiple trading weeks. Now, we do anticipate, as with anything, again, bearish coming into the front side of the week, and that will kind of determine where we will stand for the remainder of the week. So Monday's action will be key for us to watch and make some good decisions. As with anything, we do want you to be prepared and look for other opportunities. If there are bear markets, there obviously have to be some type of bull markets somewhere. So we did see, as we saw major sell-offs across the major indexes, we did see gold seeing a very nice pop coming into this week with a huge flight to safety from overall equities and overall indexes. So gold did see a nice push upwards, roughly about 28 points on the overall futures, and we did see roughly about 2.7 points on the ETF. Now, full disclosure, we are long gold, and we will continue to be long gold as we close out this overall calendar year and looking into 2020. So we'll finish with gold this week. Actually, I do want to highlight one aspect of the overall market to kind of keep an eye on. It's called the VIX. The VIX is a new instrument that we haven't really talked about too much in our channel here, but do want to kind of give you a little bit of context. It's a measurement of overall volatility of the overall market. And we have in front of you a one-year weekly chart. So one thing to kind of orientate you to the chart is the higher the number, the greater the fear that the market feels in anticipation of particularly downward action. So you can see as the candlesticks increase in value, that means that there's an increase of overall fear, meaning potential of selling and downward price action moving forward. So we'll highlight just last week, and we can see that there was a huge jump in the overall fear on the VIX, roughly about 20. However, you have seen that push up over the last 2 to 3 weeks as well. So keep that in context, that albeit this past week was very much a downward week, the market does not necessarily feel that it's overly aggressive in regards to its selling. So we want to keep an eye on and keep everything in context that we have seen higher VIX in the most recent past. Now, that does not mean that this number can not necessarily get back upward to where it was just 3 weeks ago, roughly about 25, 24 and a half area, that this can continue to move in a particular direction. But we also want to keep it in an opportunity for us from a longer investment perspective that as prices decrease and companies still continue to host value, keep in mind that price is just an advertising mechanism to entice both buyers and sellers to step in certain fashion. So if you are long a particular equity, Amazon is not going out of business. Facebook is not going out of business. AT&T is not going out of business. So if you have seen some equities that you have been following, this is an opportunity for you potentially to get some type of discounted prices. Just want to kind of give you a little bit of chart school this week. I know we're getting a little bit long in our video, but we also want to convey as much information as possible to help you make better informed decisions on your money. As with always, it is your money and it's under your control. Take care.